Bitcoin was launched in 2009. The cryptocurrency made headlines in 2017 when it soared 20-fold from the beginning of the year to almost $20,000 by December. The euphoria fizzled out and Bitcoin sank below $5,000 by October 2018. The years 2018 and 2019 were bear markets for the cryptocurrency. It recovered all its losses by December 2020 and has been on a roar since then, hitting new highs in February and again in March.
Whether you believe in cryptos or not, you have to respect the momentum of the trade. So I'm not prepared to say that this is the top of Bitcoin. It could well trade to 100,000 on speculative mania over the next couple of months.
Fears of currency debasement are driving investors into cryptocurrencies.
Central banks around the world are generally printing a lot of money, trying to create inflation, trying to actually inflate debt away. So since 2008, global financial crisis, that was based on a mountain of debt. Debt levels since then have actually risen very sharply again. So people are worried about whether the dollar or the euro or sterling will be a good store of value going forward.
Some market watchers are not worried about this recent uptick in inflation, though.
This is not 70s, early 80s style inflation. This is growth, recovery-driven inflation. I would almost call it healthy inflation. I don't know if there's any sound underlying reasons it would be an inflation hedge.
Skeptics also point out that Bitcoin can't be a reliable store of value because it is so volatile, with dramatic price swings up and down.
A store of value, by definition, is something that doesn't change in value that much, or ideally goes slightly higher, especially when you take into inflation into account. So I think from our perspective, the way we look at this, if you're saying, okay, I want something that's a store of value, then there's alternatives out there that are more traditional asset classes, alternative currencies, Chinese renminbi, for instance, but obviously the traditional one would be gold.
To them, Bitcoin is an asset without intrinsic value. Its value can be anything or nothing, depending on the market trends.
They think they can make some quick money, and that usually is ultimately a recipe for disaster.
We have seen historically so many speculative instruments, how they behave, right? So they will rise and they will have a self-fulfilling prophecy, propel that, go on for a while, and then collapse.
But there are proponents too. Tesla CEO Elon Musk has thrown his weight behind the cryptocurrency. Tesla's Bitcoin holdings now represent an eighth of the company's $19 billion cash pile. The electric vehicle maker also said it would start accepting Bitcoin for its products soon. Other corporate giants and Wall Street heavyweights have also jumped in on the Bitcoin trend.
Goldman Sachs restarting its crypto desk earlier this month, JP Morgan creating kind of debt products linked to a basket of companies with exposure to crypto, and MasterCard actually even allowing acceptance of some of the cryptocurrencies on its payment network, potentially later on this year.
The banks tend to follow the money. If lots of clients want to trade cryptos, then the banks are going to offer that service to them because they're clients. Also, if they can see a lot of volatility and money being made, then they're naturally drawn towards that as well.
For now, the markets are discounting the risks and looking at the allure of Bitcoin. More institutional money is expected to flow in. A report from CITI found that nearly 20% of advisors are contemplating investing in cryptocurrencies this year, up from 6.3% in 2019. In the payments space, payments infrastructure provider PPRO is observing a growing acceptance of Bitcoin, especially among traditional financial institutions that wouldn't touch the cryptocurrency previously.
We are seeing a lot more interest being driven by the consumer, and consequently the actual merchant. And this cuts across all ranges of industries that are now starting to accept Bitcoin online, right? Things that you wouldn't expect, like F&B, right? Restaurants, KFC, Subway, accepts Bitcoin payments for sandwiches and fried chicken. This is certainly a global trend that we're seeing.
Still, it is an undeniable fact that Bitcoin is volatile, and businesses that accept the cryptocurrency as payment will need to hedge their risks in the same way they hedge foreign exchange risks.
If I here accept in Singapore, accept Japanese yen as a payment, I know the danger of it. Right? Danger coming from Forex can move around. So therefore, I will have a hedging program. In other words, Forex, foreign exchange, risk management. Either I do in-house with my own team or contract somebody, financial institution to help me out with it. So if I take a Bitcoin, I can have a likewise thinking, but invariably, that means a cost.
For the merchant, it feels like a fiat currency. The consumer is paying in Bitcoin, but the merchant then receives the dollar amount. It doesn't receive a Bitcoin or a fraction of a Bitcoin. So in terms of that price volatility, the merchants aren't exposed to that price volatility. Right? Companies like BitPay remove that volatility from the system for a merchant to accept cryptocurrencies.
Hedging will increase the costs of using Bitcoin even more. Already, the transaction fees for Bitcoin are not cheap. Users have to pay a fee to miners in the Bitcoin network to process their transactions. According to data provider BitInfo Charts, the average transaction fees have been on an uptrend since mid-October last year, reaching a high in February this year.
But if it's a lucrative business, I will accept it, right? You know, I said, if something, my profit margin is large, it's okay.
PPRO thinks Bitcoin will evolve to become another method of cashless payment.
Becoming one of those preferred ways to pay. Much like GrabPay and Pay now here in Singapore as locally preferred payment methods, Bitcoin could be one of those going forward.